Well, thank you for staying with us on the AM show. And after sports, we get into some of those topical matters, big stories as we call them. The first, we're going to be contemplating what you see in the background, the policy rate, which has hit, by the way, 29.5%. The Bank of Ghana in recent times actually incrementally put that forward by 150 basis points. It's upped it by 150 basis points. What this means is credit is going to be harder to get, and if you get it, you're going to be paying anything upwards of 30% in terms of interest. How is this going to impact business? How is it going to impact individuals? And for those already on facilities, what are going to be the implications? These are crucial times. The Bank of Ghana has said that it has had to do this on the back of curbing the inflationary rate. But what are the other dynamics at play? Well, helping us get into that conversation, we have Professor Elikplim Agboya. He's a lecturer at the University of Ghana Business School. Prof, a very good morning to you.
Yes, good morning, and good morning to your listeners.
I also see the president of GUTA in the background as well. Doc, a very good morning to you.
Good morning, sir.
Great. Let me start with Professor Agboya on this matter. I mean, over the last, year or so, we have seen the dynamics as far as our currency is concerned, which has also had spin-off effects on inflation. In fact, some of the highest inflation we have seen in some 2 decades. But the Bank of Ghana, in attempting to tame inflation, has been hiking the policy rate. What has all of that meant from last year when this activity started till now? Have we made the sort of gains maybe that we would have expected, Prof?
Okay, so thank you very much for that question. Like you rightly pointed out, the BoG has been on a rate hiking cycle. So they've been increasing the policy rate since November 2021. And cumulatively, so far they've done a 16% increase. Okay, so that's very much unprecedented. There are many reasons why they have done this. Before the MPC meeting, I thought that they shouldn't increase the policy rate for a number of reasons. So number one, we have seen some decline in oil prices. Inflation had reduced, though marginally, so it reduced to 52.8%. So there's been some marginal decrease in inflation. Also, the size of the negative real interest rate had been declining. And what I mean by that is there is a difference between inflation and the policy rate, or interest rates in general and the policy rate. Okay, so the negative interest rates have been declining, and negative interest rates are not generally a good thing because it means that when people invest, inflation is more than the returns that they are receiving, and that is not very attractive for investors, which may mean that people begin to find options, for example, that they may want to invest abroad or invest in the dollar. So in a certain sense, the negative interest rate has been declining recently. Now, also the exchange rate pressure is not too bad. The currency hasn't depreciated as severely as we saw last year. And also, another important reason that I thought they should hold the interest rate was that we've seen some instability in global financial markets. So, for example, Silicon Valley Bank collapsed, Signature Bank, and even Credit Suisse also has been taken over by UBS. So there's been some volatility in financial markets, and even domestically, we have some financial stability concerns. So due to the domestic debt exchange program, the balance sheets of banks are generally weaker. They are not as strong as they used to be. The capital adequacy ratio has declined, though it's above what we usually consider to be adequate, which is about 10%. Okay, currently it's at about 15%. So for a number of reasons, again, the final point that I would make is that Treasury bill rates have been coming down. And I thought that gave the central bank some flexibility to at least hold the policy rate and not increase it. Having read the MPC report, I understand why they increased the rates. So number one is that typically we have to follow the advanced market central banks. So before the MPC concluded its meeting, it had seen that the U.S. Federal Reserve increased their rates by 25 basis points, which puts pressure on the central bank to also increase. Because if we don't increase, then people will move their money from Ghana to the US, for example.
Right. So those are some of the reasons behind this. We'll get into some detail on that, but hold for me, Prof. Also hold for me, Dr. Joseph Obeng. Let me bring in Mark Bedu-Abuaje, who heads the Chamber of Commerce. Mark, a very good morning to you.
Yeah, good morning to you, Ben, and good morning to your viewers as well.
Right. I know you're on a time leash, so I'm going to do this very quickly. This latest hike in the policy rate by the Bank of Ghana, now it has hit 29.5%, I mean, generally. And this is another 150 basis points that have been added on. Over the months, we've seen these measures by the Bank of Ghana. For you, the Chamber of Commerce, what will be the implication of this latest move?
Thank you very much, Ben. For me, this increment came as a surprise to us because we have seen some stability in the macroeconomic environment. The inflation is slowing down a bit. The foreign currency market is also stable. So the least for me that the central bank could have done was at least maintain it at the 28%. Simply put, any time the policy rate goes up, banks also respond positively by increasing their lending rate. At the moment, the average lending rate is between 35 to 40 based on your risk profile. So the increment therefore means that banks are also going to increase their lending rate. So can you imagine if you are borrowing at 40 to 45%, given the other difficult situations that businesses are going through? A lot of businesses are going to collapse. Those who have borrowed on a fixed interest rate will not have much of a problem. So if you have borrowed on a variable interest rate, it means that you are going to pay an additional interest on the money that you have taken.
In other words, people with facilities already are going to have to pay more on the same facility, on the same amount.
Yes. So if your interest rate, your agreement with the bank is not fixed, you are going to pay more interest given the fact that the policy rate has gone up and banks are also going to increase their lending rate. But if you have on a fixed interest rate, at least you'll be paying what you have paid over a given period of time. The other issue also has to do with the banks. At the moment, the banks are struggling based on the DDEP. The banks are looking for opportunity to also generate interest income. Private sector will not be able to borrow because the interest rate is very high, and the banks are also not going to get the interest income. So the things that we are saying that banks are going to struggle, we are also making it difficult for the businesses and also for the banks. Together with the increase in taxes, the new taxes that are introducing, I'm afraid that its negative impact on the private sector is going to be there. We have said that businesses are suffering. Businesses are collapsing. So I think that it was highly insensitive for the central bank to increase the policy rate again, which will also translate into increase in the lending rate for businesses.
Now, did you mention that borrowing, the interest was around 40 to 45%? Because I know that by and large it's above 30%, but 40 to 45%, is that what you said?
Excuse me, I didn't hear what you said.
So the lending rate or the interest rate, so to speak, yes. Did you mention 40 to 44%?
No, at the moment, on average, it's 40 to 35 to 40.
Okay.
And definitely once there is an increase in lending rate, the bank will also respond, as I said earlier. And the likelihood that the lending rate will go up between 40 to 45% is very obvious. And businesses are going to suffer. So in the future, I just start for the business community in Ghana. I hope that very soon something will be done to bring some relief.
Something like what? Something like what?
Something like bringing the policy rate down something like all the nuisance taxes that the government intends to add up to the taxes that we have will be withdrawn. We have made that submission that this is not the time for government to introduce new taxes or increase the rate of existing taxes. So we have to listen to the concerns of businesses so that the right environment is created. Businesses need this environment. If the environment is conducive, they will produce, they will make their profits, and then they will pay the tax that businesses are supposed to pay. If you continuously increase the policy rate, in fact, the monetary policy and the fiscal policy is supposed to strengthen a microeconomic environment. That is the private sector and the productive sector. In Ghana, we seem to be using this policy to cripple the activities of the productive sector, and it's not good. If you kill the businesses, nobody will employ, and you may not also get your taxes. So let's look at how we can use macro policies to strengthen or complement the activities of the micro policy, that is the businesses and the productive sector.
Mark, so I do know that the banks follow the regulations, the guidance of the central bank, that is the Bank of Ghana. But do the banks automatically reduce their interest rates based on policy rate reductions so that if someone, a business person or some ordinary citizen had a loan or a facility, they would immediately feel the impact in a given month?
Are you saying the banks reduce
when the policy rate is reduced,
yes,
will it directly impact the interest rates that the banks put on their loans?
Well, to some extent, we have a very rigid banking sector where they respond positively to an increase in policy rate. But when it comes to reducing it, they are a bit reluctant to reduce it to the extent of the reduction in the policy rate. And that has been established. But at least it will give some relief, to translate into a lower lending rate, because the lending rates are coming down. The lending rate actually is the basis for which the banks will set up their base rate and add a risk profile. So if the lending rate is coming down, most banks will respond by also reducing if the policy rate is coming down, also reducing their lending rate. But if it goes up, the banks will also increase their lending rate as well. But the rate of reduction is not always as the rate of increment when there's an increase in the policy rate.
Well, so that would be a tricky situation, especially for those who have already been on facilities, and I know exactly what I'm talking about, who have seen increments in the payments that they have to make month on month. In some cases, people are paying so much more on the same amount, you get it. And yes, that is pretty problematic. But there are those new bills before Parliament as well, Growth and Sustainability Bill or the levy. There's also the excise duty, among others. How do you react to those? We've not had a conversation on that with you, so I just want to find out. How do you react to them? Will they only go to further exacerbate, compound your problems?
The line is changed. I guess you're talking about the new levies, right?
Yes. Will they further compound your problems?
It would definitely compound the problem. Definitely. If you look at the Growth and Sustainability levy, which is 5%, now they have roped in other businesses that previously were not paying the national fiscal stabilization levy. These levies are supposed to be temporary. From 2021, we have turned this levy into permanent. And it's before your tax, which means that it becomes an expense to you. So your expenses will increase and your profits will go down. And then after that, they will tax you your corporate tax. No business will be able to make enough profit to reserve as retained earnings and reinvest in their businesses. If you take the excise duty, the food duty, they were not paying. Now you say you have to pay 20%. The water they were paying 17.5. Now they have to pay 20. This becomes direct cost to businesses. So coupled with that, I said the challenges that businesses are going through, it means that the cost of production will go up and businesses will not be competitive. You have opened your market under the AFTA and you expect that your businesses will be competitive. Now their cost of production is going up and prices will also go up. The difficulty is that it's not easy increasing prices, as people think that when there's an increment, they will increase prices, because some of them are put into a level where they cannot increase prices. They will be forced to absorb this cost, and eventually most of them will not be able to contain it, and they may collapse.
My final bit to you, Mark, since you have to take leave of us, and gentlemen, thank you for your patience. I just had to round it up with Mark, or round it off with him, so that I would be able to let him go. You consider all of these factors, but in there, mention is made of the fact that we need to go through all of these steps to get to the point of securing an IMF deal. How do you feel about the punishment, so to speak, that we have to go through just in order to secure an IMF deal? Are there other ways of doing this beyond what the Bank of Ghana and the executive arm of government is doing?
Well, the IMF deal did not ask us to increase taxes. The IMF deal asked us to increase revenue. And there are other...
It borders on sustainability.
Yes, increasing revenue. In fact, if we are able to improve our tax efficiency and digitize our tax collection system, we'll be able to make more revenue than increasing the tax rate and introducing new ones. The tax system is such that when you increase it to a certain level, the revenue that you expect you won't get, because people will find a way to avoid the taxes. So I was expecting that at least they keep the old taxes and also ensure that they improve on the efficiency of collection. Businesses are not against taxes. Businesses want to pay tax. But if you make it too difficult for them and introduce some of these nuisance taxes, in the end, you will kill them and not be able to get your revenue. So for me, I don't think that is the best approach. We've also made mention of government cutting its costs. I think that we should go to the drawing board and look at that one and look at where the costs can be cut and how we can also increase tax revenue. If you look at the e-levy, it's a great lesson to us. We made mention that it was going to affect businesses, and the likelihood of avoidance is there. They didn't listen. This one, I think they should withdraw the tax and also come back to the table for us to discuss. In fact, we've not had any discussion on that. We only saw it in the budget, and now they are seeking to get approval for its implementation. In the end, those who are going to pay, they should be able to engage them, the business community, so that we let them know the impact of this on our businesses and how it's going to affect the economy going forward. That's what we expect from them. Thank you.
Thank you, Mark, for joining the conversation. Mark Bedu Abwaje is CEO of the Chamber of Commerce. Before I go to Dr. Joseph Obeng, who is president of the Ghana Union of Traders Association, GUTA, as we call them, just to break down. So the road tolls are returning. They are making a return. And in some cases, averagely, we're looking at about 80+% in terms of the increments. In some cases, it will be up by over 100%. Looking at the surrounding issues, up to about 400%, looking at other factors. So road tolls are coming back. The e-levy is still on board. We have the likes of the COVID-19 levy, which some people have said is no longer relevant. It's one of those that had sunset clauses, or in fact, should the promise was that it would not, be here forever, it still is with us. The Get Fund levy, the only reason I mention this is that over the years, as has been pointed out, a chunk of it doesn't go to the Get Fund to support education. In fact, this year, below 40%, I think between 36 or 39% is going to the Get Fund. What happens to the rest of the funds? We're paying all of these. Add that to the fact that these three bills are going to come on board, new taxes, new levies, and we still have inflation very high. The Ghana Union of Traders Association came out with a release just yesterday and titled is Stop These Obnoxious Taxes. Businesses are already overburdened with high taxes and interest rate. That was just why I was premising my question to Dr. Obeng on this. How exactly is all of this now with the monetary policy rate that has been hiked, how is it going to impact your business? Let's be very candid with what this means for your business community. Dr. Obeng.
We are simply overburdened with cost of doing business. We can't take it any longer. It's becoming unbearable. Since 2021, we've been made to pay extra taxes. And because at that time, we are coming from COVID and all that, we all understood and we've come this far. But we are not even doing badly as a nation. because we were able to even exceed our tax target, our revenue target, 2022. Even for the past couple of years, we have been exceeding. So businesses are doing their bit to help. But at what point can we stress this? We are being overstretched with these taxes. And now with this introduction of these obnoxious taxes is going to be the last straw that is going to break us. Because then we are going to pay multiplicity of taxes. If you think about the growth and sustainability levy or tax, what it means is that all these businesses that are going to pay the 5% of their gross profits are going to offload all this on us. Shipping lines, when you give them the opportunity, they will just pass it on. They will even double it and pass it on to the end user of their service. And this is what we are talking about. That at this time, that we want to ensure growth in businesses. At this time that we are even having a semblance of stability in the forest and all that. This is not the time to bring these things to compound our problems, to even stop the growth that we are all seeking for businesses. Government want to enhance on local productivity. How do you produce? You cannot overprice productivity. It doesn't make sense. That's why we have to do everything to prune down the cost of doing business, including cost of borrowing, which is also going up by the fact that the monetary policy rate keep going up. It would keep going up, and then inflation is not being solved, because that's not the panacea, that's not the methodology to use. Because there's inflation because there's accumulation of cost of doing business. That's why it has affected prices negatively to that extent. It's not as a result of demand or the excess liquidity of cash or otherwise that you say that you are mopping up the excess liquidity. So you see that our policies are not helping us, and businesses are actually reeling under the distance. The COVID effect did not come and spoil businesses only. It came to, as a matter of fact, destroy most of our businesses. And that government is not only the victim. And if we are the victims, that's the reason why government cannot, government says that they are not getting its bit of revenue, because businesses are collapsing under the effects of the COVID and the Ukraine war. So why can't government sympathize with these businesses that are dying? Now we are very irrelevant in the scheme of affairs of the continental free trade area, because our cost of doing business is far higher than our other member nations.
So you're saying that we have the secretariat here, but we can't do much. Our business community is not benefiting from the arrangement.
We are just irrelevant, because if the cost of doing business is so high, you are in competition. You are borrowing over 40%. How can you produce and then break even and even be competitive with your counterpart elsewhere in the globe? So it means that you are just crippling businesses, and that's what we are talking about. That whenever we talk about excessive taxation, but unfortunately, I know that this government is very much aware that excessive taxation does not help businesses. That's why in 2017, government in its own wisdom said that no, businesses are dying, and that because of the effects of the what they call nuisance taxes. And then they try to remove most of these nuisance taxes for us. Now, these nuisance taxes are creeping back in force and in other forms.
What are some of those? What are some of those nuisance taxes?
If we have COVID have come and it's punishing as businesses are dying, and then you tax us out of something that is punishing us. It's nuisance, complete nuisance. If you have this special import tax levy of 2% that was passed even by the previous government, that we said that after the sunset we will remove it, and it has been there in perpetuity. Who is going to believe you when you say that growth and sustainability levy is going to go up to 2025? Nobody.
Has the increment in VAT been a nuisance as well?
Yes, sir?
Has the increment in VAT been a nuisance as well?
Yeah, to the extent the rates at which we are paying now, then there's a kind of nuisance. If the rate that you are paying is manageable, and then if it is embedded in it, the 6% that cannot be claimed back, then the 6% is a nuisance on businesses. I hope you understand. And this is what businesses have been complaining. And that if we are not able to sit down, dissect the issues and evaluate and put it in proper economic form, because in economics, whatever thing that you put on the table, you look at the pros and cons, the effects. Then if you are not thinking about the effect on the generality of your business community, where business, which is the engine of growth, then what kind of economics are you doing? Now businesses are suffering. We cannot go any further in terms of these taxes that we are paying. This, I'm calling it obnoxious, because they are going to hand all these taxes to us. And if you are taking it from insurance, we'll be taking some from banking, we'll be taking some from the shipping lines, the communications center service industries are all going to put this 5% on us.
Okay, so I want to move on.
How is the business going to survive?
I'd like to move on to Prof, but just to conclude with you on this specific point, Dr. Obeng. So basically, you've hit breaking point. Just confirm for me. This is breaking point for you.
Yes. We cannot take it any longer. It's too much. Cost of doing business already, we are very uncompetitive in the sub-region. Ask yourself, why do Ghanaians go to Togo, just Togo here, to buy their goods rather than buying from within?
All right.
How are the other neighboring countries not coming to buy from Ghana, from our manufacturing companies, and even from the imported goods that we also bring? Because the cost of doing business here is so high. And now we are going to compound the problem. And with Bank of Ghana, we are even surprised that the methodology that they are using to cap on inflation is rather the one that is worsening inflation. And it's not helping businesses.
I'll come back to you on that last point you made, but let me bring in Prof. Agboyo. Prof, now having listened to those in the business community, from the Chamber of Commerce, Mark Bedu Abuaje, you've just heard from Guta as well, Dr. Obeng, what picture does this paint? Is the Bank of Ghana, and by extension the executive arm of government, are they getting things right in terms of these measures being implemented? And what are the alternatives that we could be implementing? You just heard Dr. Obeng say that in trying to resolve the problem, we're only compounding the problem. What's your take?
Okay, so, well, I can understand why. So first of all, there's a separation between, let me say, the government and the Bank of Ghana, because the Bank of Ghana is supposed to be independent from the government.
I like how you said supposed to. There's a specific reason I in a way lumped them together. But yes, let's stick to the fine line.
Yeah, so they are supposed to be independent, and it is refreshing to know that the Bank of Ghana will sign an MOU with the Ministry of Finance to commit to zero financing of the deficits. So I think that will be helpful going forward. Now, what the Bank of Ghana has done, I see reasons why they have done that. Like I explained previously, I didn't think they should increase the policy rate before the meeting. I think Mark made the same points as well, very similar points to what I had made. But like I said, the US Central Bank has increased their interest rates. So more or less we have to follow. Number two, there's pressure. So it's an elephant in the room that to secure an IMF deal, we are most likely being encouraged to keep tightening. Okay, so there's probably some pressure from the IMF and the World Bank for us to keep increasing the policy rates. The next point is that there's still a wide negative interest rate. So as of December 2022, the negative interest rate was minus 27.1%, meaning that inflation was about 27% above let me say the monetary policy rate. So that's not good, because that discourages savings, that discourages investments in the economy. So it was very high by December 2022, 27.1% negative. Currently, the negative interest rate is 23.3%. What I mean by that is that inflation is 23.3% higher than the monetary policy rate. So if you are investing in, and it's even worse if you look at treasury bill rates. If you are earning 18% on, let's say, T-bills, and inflation is 52.8%, you are losing a lot of money in real terms. So they still want to reduce the negative interest rate to encourage investment in the economy. A point that came up in your discussion with Mark is that there's some perception that even if the BoG reduce the interest rates or the monetary policy rates, banks do not respond.
And that is a chief concern, because now a lot of people in the business community and outside of it are saying, look, it's like fuel prices in the past. Now at least there is some response. But when the policy rate changes, the banks do not necessarily switch, which means that once it goes up, you're going to be very highly affected, and the possibility of coming down so you get some relief is practically out of the picture. That's the problem.
But the banks are happy to increase when the Bank of Ghana increases its rates, but when the rate comes down, they don't adjust that much. So that perception is there. Probably that's one of the reasons informing the BoG not to at least reduce the policy rates. There's another reason that I saw from reading the reports, that the MPC report, the press release, the significant increase in money supply in the system, especially M2. So the Bank of Ghana is attempting to mop up this excess liquidity. If you read the reports, apart from increasing the policy rate, they also increased the cash reserve ratio from 12% to 14%. So there's a deliberate attempt to mop up excess liquidity from the market. And yes, hopefully, okay, one last point before I go to the staff level agreement. They are also increasing the policy rate. So the sense I get is that they are probably going to continue to increase, and they want. So as a doctor, what do you do?
How soon do you think there will be another increment in the policy rate?
So my sense is that they want to do it very quickly. They want to bring inflation down very quickly by the end of the year to about 25%, and by 2024 to back to their target, about 10%. So rather than doing it slowly, I sense that they want to do it very quickly to reduce their pain. So it's like a patient who is sick. Do you administer a very strong drug for them to recover very quickly, or do you give small amounts that will prolong recovery? So what I see they're trying to do is to do it very quickly, administer the dosage that they think needs to be given to the patient, in this case, the economy, so that we recover very quickly by 2024. And we're able to bring down inflation back to single digit to about 10%.
Is that practical? Is that the approach you would have used? Quick, short term, but what would be the impact on the business community? Or less pain progressively? Which approach would you have used?
Well, it's a dilemma, and I think that, and it's not an easy choice, okay, but I think that given that all that is taking place, maybe they have a strong justification for trying to bring this down quickly. You know, inflation is also a problem for businesses, and if inflation stays high, prices of goods and services will continue to be high. Inflation is something that can even lead to a coup if prices continue to increase. So I believe that bringing down the pain quickly would help.
Well, looking at what the consequences of inflation could lead to, of course, we've seen the example with Sri Lanka. No one prays that any such thing happens. But I think Prof is only making mention of the fact that when people become too tight economically, they may adopt drastic measures that nobody wants. Nobody wants that. You were going to make a final point.
Yeah, so the quick approach, they are looking at a number of things as well. If you look at economic growth, it's not severely compromised. We are not in a recession, so they have some flexibility to increase the policy rate. Again, if you look at financial stability, which was a key concern for me, I hadn't seen the numbers before the MPC press release, but capital adequacy ratio has dropped, but it's still good. It's about 15% now. Usually we look at 10% as a benchmark. So 15%, it means that the banks, even though they are suffering from the domestic exchange program, the banks are fairly strong. And therefore, financial stability is not a key concern for the BoG at the moment.
Let me go back to Dr. Joseph Obeng. You made a few things that I'd love to run by you. Hold for me, Prof. So
Sure.
you made mention of the fact that the Bank of Ghana's, the very final point you made, the Bank of Ghana's measures to tackle or tame inflation are rather getting it or making it spiral out of control. How exactly do you mean? Is that what you meant, by the way? I'm just paraphrasing. And how do you mean? What do you mean by that?
Yeah, it's very surprising the way these people think. And we are talking about inflation, and that's the cost of goods and services. And so if cost of borrowing is very high, so are they saying that when the farmer go and borrow at a higher cost, it's going to reduce inflation? When the manufacturer go and borrow at a higher cost, is not going to add to the cost again? Is that what the economists are saying, or the Bank of Ghana is saying? And they've increased the monetary policy rate to cap inflation. And they've done it about 8 times. And whenever time they've increased the monetary policy rate to trigger the lending rate, it has also triggered upwards the inflation. So what solution did we have for them to adopt the same methodology? I'm saying that the inflation that we are having is not as a result of demand or otherwise. It's as a result of cost. It's a cost-pushed inflation, and they should get it. Because the accumulation, of course, the taxes that we pay, the duties that have gone up, the farming implements that have gone up, the chemicals that farmers use have gone up, and all that have affected the farming product in the food basket. And then the imported items also, because of costs having gone up in terms of taxes and duties and all that we pay, have also made these prices gone up. And that's what have pushed the inflation that we're talking about. So if you increase the monetary policy loan to trigger lending rates, it means that we are going to also see upward trend of the inflation rather than reducing it. Because they've done it in the past and it never succeeded in reducing the inflation. And so let my brother, the professor, tell us why you think that this time around it will be able. But this time around, where we have advantage that we are having some stability in the exchange rate, and then the monetary policy rate come down, reduces the interest rate, commercial lending rate, then of course we are seeing some positive trend that would have see a reduction of prices of goods and services. And this is not to be. We are not taking advantage of the seeming stability that we are having in the exchange rate, and we are going to compound the problem. How are we going to be competitive in whatever thing that we do?
Interesting point you make. Just hold for me. I'll come right back to you, Prof. And that was a question he threw to you. I mean, look at it. The components that a farmer, for example, will use, from fertilizer to labor to equipment to diesel, everything has shot up in terms of price. Now, if the farmer wants to go for a loan, it's going to come, that person is going to have to basically... I hear someone speaking. Prof, are you with us?
Yes, I am.
Okay, so that person is going to have to pay through the nose, basically, to secure that loan. When you add all of these factors, how is that possibly going to impact, inflation? Because the farmer, for example, will have to add all of these to his products when he goes to market, and that's only going to compound inflation. So explain to all of us, I'm sure the lay people would want to know how this supposedly is going to help curb inflation.
Okay, so yes, I've heard this argument a number of times, and to a certain extent, it has some validity, because in our economy as well, the interest rate channel may not work as much as in other economies, because in other economies, there's a lot of credit. So when interest rates are increased, it's able to constrain demand. In our part of the world, not very much. However, I think that the increase in the policy rate, especially in the recent few months, hasn't worked for another reason. And that reason has been the financing of the deficit. So on the one side, the Bank of Ghana is increasing the policy rate, and on the other side, they are providing money to the government. So that's more of contradictory. So in my view, that is why the increase in the policy hasn't worked recently. But it's the same dosage of medicine that has been applied by central banks globally.
So is that to say, quickly, Prof, is that to say that our system does not necessarily, while generally that may be a mode of dealing with inflation, because of the system we have, it may not necessarily be the best way to go? Is that what you're saying?
It may not necessarily be as effective as it is elsewhere. But to a certain extent, it still works. Before we had this current crisis, if you look at I don't have the graph here. If you look at the relationship between the policy rate and inflation, you see that they trend together. So there's a certain correlation between the inflation rate and the policy rate, meaning that to a certain extent, monetary policy is effective. It may not be as effective as it would have been if our economy was more formalized compared to developed countries. But I think that the policy rate still works. It's still a channel that is useful in addressing inflation. One of the ways in which it does that is that, at least from the perspective of capital flows, okay, if interest rates go up, then there's a motivation for people to keep their money in cedis rather than changing it to dollars, both for domestic and external investors. For external investors, if interest rates in the US are going up, then they may take their money out of the country to the US, for example. And that's one of the biggest reasons why our currency depreciated last year. We had what we call portfolio reversals, where investors who had invested in our bond markets, they sold their bonds, changed their money to dollars, and went out. That was a lot of exchange market pressure. So in this sense, the policy rates can be useful in the sense that it encourages people to keep their money in cedis. It provides some incentives for investment in the economy as well.
Thanks for that explanation. Let me come back to you, Dr. Obeng. So on the back of what has been said, I'm curious though. You spoke about the interest rate and all the other dynamics, but for those members of your group who have gone for loans, what is loan repayment like in these times? And now that the policy rate has been hiked, what can you expect? What are you looking forward to?
Yeah, so our problem is the same and even worse. Because you see, when there's inflation like what we are experiencing, what it means is that the purchasing power of the consuming public is also affected negatively. It means, therefore, that they are unable to buy more goods, and the businesses thrive on turnover. So if they are not able to buy the way they should have, it means that we are unable to service our loans and our suppliers' credit. And so it compounds the problem.
Hello, Doc. Let me try one last time to see whether we have Dr. Joseph Obeng back with us. He is president of GUTA. Doc, can you hear me? All right. Doc's connection is frozen. I'll direct this next question to you, Prof. Mention has been made of the fact that on the back of the latest increment in the policy rate, it would hike interest rates up to the band between 40 and 45%. Already, it's hovering around 30, 35 and 40%. Now, it would hike it up by another 5 percentage points, so to speak. How bad is this comparatively, putting this side by side with what is happening in the sub-region, for example, in terms of competition, and our inflation is where it is? Halving it is not going to be easy. Bringing it to the 25% range is not going to be easy. Put that side by side with the fact that the interest rate is going to be around 40 to 45%. Comparatively, what would this mean? Right, we'll try to get our guests back on the line, but this is the conversation we're having this morning. It has to do with the Bank of Ghana increasing its policy rate by another 150 basis points. This is about the 8th or 9th time this has happened, bringing the overall figure to 29.5%. But the question is, how is business going to deal with it? Big business, small business, SMEs, for example. Guta talks about those. How are they going to be able to weather the storm and sail through these choppy waters, basically? We've been talking about inflation. We've seen where it has been over 50% in recent times, even as it has plateaued. Then we have also had to do with the currency. And at a point sometime last month, our currency lost value of about 20+% within a short period. The fluctuations are still there. Now, there are those levies, taxes that we're hoping to bring to bear. 3 of them that we are putting before Parliament. And all of this, when you add that increment in the policy rate, it can only mean one thing. There's going to be a lot in terms of scaling the hurdle of doing business in Ghana. So that is what we're discussing this morning. We'll try to get our guests back on the line. Initially, we spoke to Mark Bedu Abwaje, who is CEO of the Chamber of Commerce. He shared his thoughts with us and made it clear that this was only going to compound the problems of the business community. He did not mince words. We also have on the line Dr. Joseph Obeng, who actually is president of GUTA, and Professor Agboya, who is a lecturer at the University of Ghana Business School. Well, we have connectivity issues, so I guess we'll just have to draw the curtains here. It would have been good to get their last comments on some of these dynamics, but interesting points that have been made. I wish, though, Dr. Joseph Obeng could have shared his final thoughts on the loan repayment bit, but technology will not allow us to do that. We're grateful to them for having joined us for this all-important conversation. But before we get into our next conversation, which interestingly also borders on financing our system, our economy, and sustainability, that is in politics or on the political front, let's just remember that water is life. Need I remind you? Just before I get into this, it's been noted that a lot of us nowadays are not drinking sufficient bits of water. You know what that could do to your kidneys, what it could do to your system generally, knowing that about 70% of our bodies consist of water. So water is life. Awake is premium purified water treated through that strict purification process to ensure that every bottle on the market refreshes you better. And no matter whether for children, for adults, whatever you're looking for, 330 ml, we have 500 ml, 750 ml for the heavy drinkers, even 1.5 liters for those who always want more. Like me, I drink a lot of water. I start my day by drinking water. They also have 19-liter jars for offices and homes. All you must do now is drink Awake Purified Drinking Water wherever you go. So choose a bottle of Awake Purified Drinking Water today and get quality hydration. Awake Purified Drinking Water, one for life. Remember, for every bottle you purchase, every one, a donation is made to the National Cardiothoracic Center. And for me, that's the highlight. It's heartwarming. It's another quality product by Casapreco Company Limited. For bulk purchases, just give them a call on this number, 0262 351 251. 0262 351 251. And this advert, of course, is FDA approved. Stay with us on the AM show, because up next, Bernice Abubedo Lanta will be walking you through what former President Mahama has been saying about stabilizing our economy and what he would do should he be given the nod. All of that on the AM show up next.